Okay, good morning, everyone. You're most welcome to today's episode of the Market Snapshot. My name is Norbert Kiza, and I'm happy to be with you guys today to take you through what you can expect in the markets for today and how the markets essentially have been since we last met. So, for today, we have quite a lot that we're going to go through. First of all, we are going to begin by reviewing the CPI. And then after the CPI, we're going to move over to the Fed Watch tool to see uh, uh, what the Fed Watch tool is telling us regarding the rate cuts. And then we shall finish that up by going over to look at some of the information we have regarding the intervention on the intervention on the yen. And then soon after that, we'll finish it up. Then we'll looking at them. Just a moment. Okay, great. All right. So looking at the numbers that we had, looking at the numbers that we had yesterday, the numbers that we had for the CPI came in, I would say, not too much from what we expected. We were expecting to get a relatively cool number, which of course in this case we did because the CPI dipped, to 3%. And of course, we saw how the market reacted to that. We saw a very, very sharp buy there on a number of things like euro dollar, pound dollar, euro dollar, pound dollar, GBPUSD, euro USD, and of course, assets like the indices, all of them spiked higher. And of course, all that was because of the cooling. Now, of course, the CPI report that we got indicated to us that it's going to be very, very soon when the Federal Reserve is going to act on cutting the rates. And of course, if you look at the CME Fed Watch tool here, you can see that before we had the CPI report, the tool was the Fed rate swaps were pricing in an about 70% chance of a rate cut in September. But after the CPI report was released, we saw that the chances of easing actually increased to about 92.5%. And of course, looking at the first rate cut coming in sometime in September. Now, aside from that, if you look at the CPI data that we got yesterday, we saw that on the CPI headline, the monthly number, it dipped into negative territory, again reinforcing those signs that the US economy might be going into some bit of cooling that might warrant the Fed to cut rates. Now, of course, we have the Federal Reserve, the next Federal Reserve meeting and conference is going to be on the 31st of this month. So we'll be waiting for Jerome Powell to provide us some indication on how that is going to affect the market. Now, so as of now, if you look at the markets, we are seeing some buying still there for euro dollar. And of course, looking at pound dollar, again, we are seeing a lot of buying momentum. There was a bit of a dip after the news, but we are saw that the market reversed and started buying. And for those of you that might not be understanding why the markets are looking very bullish, it's because of that of the cooling CPI. Pointing towards the chance that the Fed will need to cut rates soon enough. Now, again, previously, if as we will see on the MT5, we were bullish on the pound. We have been bullish on gold, I think, and the rest of my colleagues have also been providing you the same. We're looking towards buys on euro, buys on pound, and buys on gold. We discussed this on Monday, and of course, we are seeing that the market is responding quite nicely. Now, looking at the summary from the CPI report from ING Think, this is what they are saying. So they are indicating here that the US CPI has settled down to a rate cut territory. First May, now June. Okay, so the first report we got for May indicated that there was a bit of a slowdown coming in on the CPI. And now, if you look at the reading we got for June, again, the reading reinforced that slowdown, and we saw that there was actually a bit of a decline that came in from that CPI. Now, going ahead again for July, we are seeing that treasuries can continue to anticipate rate cuts from the Fed. The ECB will unlikely commit to a September cut next week, and also will push back against market pricing of an 80% probability. Reading further into this, it's saying that we predicted lower yields and steeper curves. for 2024 at end of 2023, but we pivoted to a more bond bearish stance since early 2024 as the inflation data propped higher. We then switched back to a more bond bullish stance about a month ago based off the subdued May inflation reading. Since then, we are back to lower yields and a steeper curve view. Yeah, so bond yields, we're expecting them to steadily decline. And of course, we have been seeing that if you look at the yields, the way the yields responded to yesterday's reading, there was a sharp sell on the yields and they're now steadily rising. So I think we should see the yields declining. We have also seen that the DXY has also been taking a hit from that particular reading that we got yesterday. Awesome. Now, looking into the calendar for today, we have the PPI data. The PPI data, I do not think is going to dissuade the market too much. We should potentially see a reading that is going to be in line also with the one we got for CPI, where we are going to see a possible slowdown on core and on monthly PPI readings, which would again warrant us to have another round of selling for the dollar, where we should see some selling coming in for assets like USD CAD, USD CHF, and of course some buying coming in for assets like gold, which again has reclaimed $2,400 and is likely to stay above $2,400. Now, again, another highlight in the markets is for those of you that were trading, if you are trading anything that had a JPY yesterday, you must have noticed that yesterday, actually, after the CPI reading was released, there was actually a very sharp sell on the JPY pairs. We saw that JPY pairs actually selling, and I first saw a sell on USDJPY, which made perfect sense simply because every dollar asset actually fell yesterday. There was a sharp sell on USD CAD. There was a sharp sell on we can just go quickly here to see. There was a sharp sell on USD CAD. There was a very, very sharp sell on on things like USD CHF again also had a very, very sharp sell. We also saw a very, very sharp sell as well also for USD CAD, USD CHF, USD CAD, USD CHF. What else? Yeah, USD CAD, USD CHF, USDJPY, all those had very, very sharp sells, and of course the reason for that was because of the reading that we got. Now, if you come and look at USDJPY, you notice that actually USDJPY essentially it also sold yesterday, and it sold at 330. Okay, it sold at 330. And same thing also for EURUJPY. All these assets were selling. So it didn't make sense to me, because that would only mean one thing. It would only mean that there was an intervention. So we have some news here. It's saying that Japan top FX diplomat says authorities take action as needed on the yen. So they're saying here that Japan's top currency diplomat Masato Kanda said on Friday that authorities will take action as needed in a foreign exchange market. Kanda also told reporters that recent yen movements were somewhat rapid and declined to comment on whether authorities had intervened in the currency market to prop up the yen. Interest rate differentials between Japan and other countries are narrowing, so it's natural to believe that recent yen moves are speculative. Awesome. So on one hand, we are getting some signs that perhaps there was an intervention, and then on the other hand, we are seeing that there wasn't an intervention. Of course, they can't admit, and of course, this is what I would call a stealth intervention, where they actually intervene, but they won't tell you they have intervened. Okay, so something like that. Yeah. So stay cautious if you're trading JPY pairs. Stay conscious. The previous times we've seen interventions, it has usually allowed us to see steady possible move higher every single time there's an intervention. That's why you can see even for USDJPY, much as we saw it selling, you can see that actually it held around there, and it seems to be in a steady recovery that should possibly take us maybe back to this area here over time. Same thing also for the USDJPY. I'm expecting that we should see a steady buy there coming in for the USDJPY. You can see that we had an order block there, which formed along this level here, and we are seeing some kind of steady recovery there, possibly from the market, pricing in that intervention. So I'm still bullish on USDJPY and the JPY pairs, because I know that every single time we have been getting an intervention, we normally see, we usually see the market recovering from those sales. Now, for those of you that are trading, the indices, especially the Dow Jones, today we have the earnings kicking off. We have the earnings which are going to be starting with the big banks in the US. We have JP Morgan that's going to be releasing its earnings a few hours from now. We have Wells Fargo, which is also going to be releasing the earnings before the bell at 4:30 p.m. We have Citigroup, which is also going to be releasing its earnings. And then, of course, we also have Bank of NY Mellon. So the key focus for the earnings is going to be the net interest margin. We've been seeing that, of course, the banks have been having they have been taking some bit of defaults, especially in commercial and consumer loans. As you can see, that there has been some kind of a slowdown in the US. So if we see that their net interest margin actually comes in higher, and we see fewer loan defaults on their commercial and consumer loans, I think that is going to be bullish for the banks. And the financials are really going to be on the spotlight, because for us to see a sharp move higher for the Dow, possibly towards 40,000, traders are going to be looking towards how the banks have done in Q2, particularly on net interest margin. Now, if you look at the Dow Jones and how it has been trading, again, guys, we provided a buy for the Dow Jones, which worked out quite nicely. And I'm still bullish on the Dow Jones because I'm expecting an earnings beat on the big banks. I'm expecting an earnings beat for JP Morgan, Wells Fargo, and Citigroup. And I'm also anticipating that we're going to have some strong guidance from them, especially on the back of trading income. I'm expecting trading income to come in higher, and I'm also expecting at least we see fewer defaults and, of course, a higher net interest margin there for those particular banks. So if I look at the Dow Jones on FX Pesa, the Dow Jones had a very nice buy on FX Pesa. If you're trading the Premier account, most likely you must have seen some buys, which of course we provided yesterday. And we are seeing that this is actually pointing towards an even higher buy. If you see the Dow Jones on the right side of my screen there, a bit of choppiness over there, but then of course we saw that the market steadied itself and started moving higher. So we are seeing that play out, and soon enough, we should be back to 40,000 and even higher. Now let's cross over to the MT5 and see what's happening over on the charts and how we can trade today. Okay, so let's cross over to the MT5, guys. So I'm going to begin with US 30 roll. Feel free, if you have any questions whatsoever, you can send in your questions and I'll be happy to help go over them. So I think this, from the last time we met, again, guys, from the last time we met, we said that the Dow Jones had a golden cross. I pointed it there for you, where we had a change of trend. We mentioned that that after the golden cross, we'll be looking for buys on the Dow Jones. And again, the 50-day crossed above the 200-day, indicating that we're going to have a nice steady uptrend. We saw a bit of hesitation of price action above that 200-day moving average nicely. A number of liquidity sweeps, price stopping itself from selling below that 39,000 level. And of course, at the moment, we saw that now we've been able to break above our barrier of 39,600. Technically, Dow Jones look like now it's heading higher. If we see earnings beats today from some of the big banks, I think it's going to warrant it's going to warrant a higher move there for the Dow Jones, possibly towards 40,000 and even higher. Now, you notice here that this is a steady uptrend. So we've been seeing the market steadily moving higher, again, warranting that we should be looking for some buys there for the Dow Jones. I know that the earnings season has just kicked off, so we are going to see more and more earnings. But today the focus is on the financials, and if the financials give us, a very very strong report, then I guess we are going to see the market steadily moving higher, possibly towards that area of 40,000. And again, we should see the market possibly moving towards that area of 40,000. Now, going over to the Nasdaq. Now, the Nasdaq had a very very sharp sell yesterday, and of course, from what I've been getting is that there has been a bit of reallocation on some of from some of the tech, from some of the mega cap tech. So we are seeing some reallocation coming in there. Asset managers are cutting back on their allocation to that from to tech, and they are now moving that to the small caps and to some of the rate sensitive stocks. Now I'm expecting then that again, this sale here also was contributed to Tesla. Tesla was down about 7% yesterday. This was because they delayed. There was some news that came out, and they say that they are going to delay. They are going to delay their release of their robo taxi, something like that. So it was due for a release in August, and they have now delayed that to November. So we saw a very very sharp sell for Tesla. Again, Tesla was down about 8%, contributing again to that downside we saw for the Nasdaq. But I would say, on one hand, I think the Nasdaq was way 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 lofty. It had really bought a bit too much, and of course, I think the profit taking came in with a CPI. When we saw the CPI coming steadily higher, lower, we saw then the Nasdaq, having a very sharp sell, and we saw it coming down to this level here, here. So for now, I'm keeping an eye to see how we fare around this level. If we manage to break above that descending wedge, which I have drawn around here, then at least we should see the Nasdaq possibly recovering very slightly. But I would say, guys, I think I would say that you might need to keep a bit of a bearish outlook on it in a short term, because first of all, we have bought a lot. Okay, so we have to see a bit of a retracement. It might want to test lower levels, possibly towards that 200-day moving average. We already had a crossover on the lower time frames. If you go to your 50-minute time frame on a Nasdaq, you'll be able to see that we had crossovers here yesterday, all indicating that you should be looking for buys. So we had a crossover there on the M15. Again, if you go on the M5, the M5 had a nice crossover right at the peak of that sell, and again we saw that all this was pointing towards a sell way 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 earlier on, before the market continued selling. Okay, now what I would say is, you have what you will call a blow on the Nasdaq from four components. Okay, because you had Nvidia down about 5%. Okay, you have Tesla that was down about 7% yesterday. The semiconductors were all down yesterday, and these are heavyweights. These are mega cap stocks, so they're all down yesterday. There was absolutely no way the Nasdaq was going to manage in any way to stay, elevated yesterday, because the top components were down heavily. So it gave it a blow. And for today's trading, again, if we see some slight recovery, then I think maybe Nasdaq might hold price action around here. But if we see that wave of selling kicking in, even today's US session, then I guess as clients, then you should be looking to hold on to your sales and possibly selling it all the way there. If you are a swing trader, this might also be a good opportunity for you to hold it for a bit more weakness. Again, since we are going into the earnings season, if we see some earnings coming in from early birds like Netflix normally is around the first companies to release earnings. If Netflix earnings disappoint, if we have fewer subscribers, unexpected even fewer subscribers for Q3 forecasts, I think we are going to see the Nasdaq possibly coming all the way back to this demand zone down here. So let's keep an eye on it to see what happens there. But the chances of more selling, I think, definitely looks like something that will play out. Okay. So this is gold. Gold, again, we expected a buy. I think you can see the arrow there. This was a meeting from that we had with clients. We're looking for a buy on gold. Gold, again, without a doubt, has been quite bullish. And again, we cannot fight the bullish momentum we've been seeing on gold. It's been very, very bullish. From these levels here, we saw, first of all, gold holding that order block very, very nicely. And, coming in, getting back into that order block briefly on the 9th, 10th, again, more bullish momentum. The CPI definitely closed it for gold, and we saw gold pushing higher. Now, I would say for gold, I might want to stay bullish on it. First of all, because if you go on the higher time frames, I think it's quite clear that gold still has higher levels to get to. The highest point we had was 2,450, guys. 2,450. Looking at where gold is at the moment, you're looking at about how many pips? That's about 400 pips. Gold most likely can do at least maybe 100 or 200 pips from current levels. If I have an entry point for gold around 2,400, I'm possibly looking towards, give or take, maybe 2,420, 2,430, going into the US session and possibly even Monday London session. Gold most likely is going to test higher levels, and we should see that playing out, I think, over a few sessions. Now, we know that if you go a little back to gold's price action towards these areas here, we know that there was some headline that came out sometime around this NFP. The headline was that China has put a hold on gold purchases for their reserves. Okay, China holds China holds gold purchases after an 18-month buying spree. Okay, so that's what caused gold to sell from there. I think that time I was in a snapshot with you guys on a Friday, and we saw gold actually selling from that zone. Now, for those of you that still think it's only China that contributes to gold, guys, I'm here to tell you that that's not true. You have, and I think we went through this sometime. If you check on data from the gold, council, you'll see that India is buying gold. Okay, Netherlands is buying gold, and they're actually buying a lot of gold. They're buying a lot of gold. So it does not mean that when China holds, that means automatically that now gold is somehow going to crash. Okay. Now, second thing also, uh, for some reason, gold has for so many months failed to break below this multi-demand zone. I think we have been talking about that for some time. Gold seems to have created a support flow. Okay. It has created this flow around here. It's above 2,300, rather above 2,300, rather above 2,272 and below 2,302. So this seems to be the support flow for gold. And you can see that, it's failed to break below here. Okay. And now we are seeing it, trading higher. Now, you also have some indications that the Federal Reserve is going to be cutting soon. If the Federal Reserve cuts rates in September, I believe that is going to warrant a higher gold price, and we are most likely going to see gold possibly trading towards 2,500. But for now, I'm bullish on gold, and if I'm trading gold today, I should be looking for some buys, possibly upwards of 2,440, 2,432. Now, going over to GBPUSD, GBPUSD, I think we've been bullish on it. We provided a buy the last time we met on Wednesday, and the buy intensified after the NFP. We saw it testing higher levels, and again, if you see on your H1 time, on the H4 time frame, you can see clearly that we broke certain structures along these levels here. We saw that GBPUSD was trading much higher. Now, the barrier that we had from the last CPI was broken very nicely, and GBPUSD is looking extremely bullish at the moment, and we should see it aiming towards these levels of 1.30. And should we see, more dollar weakness, I think it's going to warrant more buying for the pound to those areas of 1.3. All right. Then crossing over to Euro USD. Again, guys, we are bullish on Euro USD going into CPI. And I'm sure most of you, again, I hope most of you are able to catch that buy. because we got a very, very nice buy there. I was expecting it to buy all the way here, but it didn't buy too much, so it just bought a little bit. But that was a very, very nice trade we got over there. Very nice push to the upside, and again, no complaints. And Euro USD is looking bullish still. We broke this structure here that we had drawn along that level of 1.08443 with a nice strong candle there on NFP, rather on CPI, and we are now aiming for higher levels. We still have all these levels of support to get you on Euro USD. So now we should be looking for buys going into the Euro session. Now, USDJPY had a very nice sharp buy also yesterday, but you can see again, guys, like I mentioned to you, that every single time the Bank of Japan has been having interventions, we always see an immediate recovery from the sell-off on the intervention. So even at the moment, we are still seeing that there's a very, very nice sharp sell that came in, but immediately after the sell, we are seeing that the recovery is now underway. So I'm expecting USDJPY to recover. We should see it recovering very soon to that area of 1.06, possibly 1.61. So for now, I'm also bullish on USDJPY, and I'm expecting us to see some buying coming in there, despite us getting some dollar weakness. So you can again also see the liquidity sweeps that we had there. Price came, broke that level nicely, and now we are seeing it, moving towards the upside. So keep an eye on it and see how you can benefit from there. So we are already almost back to our 50% retracement level there on the Fibonacci. If you're attaching it to the recent swing high, and then of course the recent swing low on the H4, it means that we should see some recovery, at least up to that above that 50% Fibonacci retracement, and possibly towards 1.06 and 160 and 161. GBPJPY is also recovering, and I'm also expecting the recovery for it to also take us back to where we were. You can see that the recovery was very sharp, and we're already moving to the upside. So for now, I'm bullish on this particular pair, and I'm expecting that we should see again some recovery going back there. Again, guys, like I've told you, if there was any intervention by Bank of Japan, we've been seeing that every after an intervention, they recover. Okay, so the same thing is going to happen there. We should see some recovery playing out there, and possibly some buying coming in there. Awesome. Guys, that's it from me. If you have any questions, now may be the time for you guys to share your questions. Just Squad, you're saying the recent move to back Uganda shilling with gold, kindly paint an economic picture on M7 thought process. Again, I'll be honest with you, I cannot comment on that. I have absolutely no, I have no knowledge of what of how Uganda is involved within gold. I wish I could, but I can't comment on that, unfortunately. Just Squad. Joseph, you're saying, what is your take between Netflix and Tesla? Which my take in terms of which is a better stock to hold. Netflix, again, I would say is a growth stock. Okay. Tesla is also a growth stock. Now, when if I'm to look at it, I would look at it in terms of which one has stable or strong financials. I would go with Netflix without a doubt. And again, also Netflix has a lot of catalysts coming in Q1 next year. They are going to be partnering with WWE, which will also bring in more subscribers for Netflix. And we're also seeing them cracking down on Netflix, on the Netflix password sharing. Personally, I have about 5 people in my Netflix. There were more than that, but they were having issues logging in. And I guess it's because Netflix is cracking down on those passwords. So I think Tesla has had to cut the prices of their cars in certain regions because they seem not to be having that much they should not be having that much traction coming in for their cars. But also there are a number of car manufacturers that have also gone into the EV space, which I think is biting into Tesla's potential market. So I think that is going to be one of the impediments for us to see Tesla moving up. But then again, there's a bit of a disconnect from what we are seeing on the charts, because if you look at Tesla, in terms of the price action, we are seeing more buying momentum coming in there. And of course, many people that are in Tesla are in it for the long term, simply because it's an environmental friendly company. So which means looking at it in a 2030, 2040, as the future goes on, it's going to support Netflix more and more. So depending on how you're holding it, if you're holding it for the long term, definitely Tesla would definitely be one stock to have there. Netflix, I think, for the short term would be my best bet, especially since we have some key growth catalysts that are going to affect it going into, especially next year, and of course going over the next years. Awesome. I hope that helps, Joseph. Yeah, Joseph, you're saying Nasdaq caught me. I'm sustaining some whips. Now, guys, again, there's going to be a video released soon on YouTube for FX Pesa, where I will be talking about how to trade US indices. Please make sure, Joseph, don't miss out on that video. It's going to guide you on how to trade US indices. Okay, so make sure you do not miss out on that video. I'm going to take you step by step on how you have to trade US indices. US indices is not only trading on the chart, you're supposed to follow so many things. So I hope you tune in and watch that video. It will help you to see how you can trade US indices. Sammy, you're saying, good morning, Kiza. What are those two indicators you are using to show the golden cross? Yeah, I use the 50-day and the 200-day moving average. They are longer term moving averages. So they are what I use. So for the 200-day, the 200-day essentially, if I'm to pull up a fresh chart for you here. Okay, so this is the Russell. This is the Russell 2000. This is the small cap index. Let me just remove this for you. So I want to remove my indicators here. So this is the Russell 2000. Okay. Now, I use the moving averages on the H4 time frame. Okay. So I'm just going to come to insert, go to indicators, go to trend, click on moving average here, and then I will get my 50-day. So you see that small box there. That's my 50-day exponential. So I'm going to click OK. So it will appear there. So that's a 50-day moving average. Now, I'm going to come also and add my 200-day moving average, simply like this. So here I'll click 200, then I'll put color it. So I color red. If I'm using red is for my selling candles, my bearish candles. Then blue is for my buying candles or my bullish candles. Okay. So now after doing that, I'm now going to wait for the crossovers. Now, when you have these two moving averages added to your chart, you're going to see the two lines crossing themselves. Okay. Now, it's not only that, but you'll also have a look at the kind of candlesticks which you have there. The candlesticks will clearly show you that the market is actually going into an uptrend. So now here you have the market going higher, but then in addition to that, you also have the golden cross. Okay. So the golden cross is essentially where you have the shorter period moving average above the 200-day, above the longer period moving average. Whenever it crosses, it's always an indication that there's going to be a change in price action. Okay. Now I can just tell you, like recently, I guided some clients recently with some trades I took on the DE40. This is the DE40. So the DE40 had a very, very nice buy. I think it happened on Wednesday, where we had a golden cross coming on the M15. I think you see it right there. So it happened here, and soon after it happened, we saw DE40 moving all the way to the upside. Okay. So whenever the golden crosses happen, there are normally signs that you should sell. Now, if you go to the Nasdaq yesterday had a very nice sell entry because we had a crossover that happened on the shorter period averages. So if you go to the M15, on the M15, you can see clearly here that there was a crossover right here. So the crossover happened, and then aside from the crossover, you're also clearly seeing that we're in a very nice downtrend. Okay, so all this is pointing towards potential is pointing towards a potential downtrend there. So I hope that helps, and I hope you can use that for your trading. Awesome. I guess I guess that's it, guys, from me. If there are no other questions, I wish you guys a nice trading day. I wish you guys a nice trading day, and I guess we shall continue from there next time. Cheers, guys, and happy trading. Oh, okay. I'm seeing a few. There's one question here. Kenton, you're saying, will there be a sharp drop on gold because the last 2 weeks, the daily Friday close has been bearish? Kenton, let me just check there quickly. A moment. Will there be a sharp drop on gold because the last 2 weeks, the daily Friday close has been bearish? Oh, that's interesting. Now, guys, for me, I'm a price action trader, so I trade price action. If the market is telling me to buy, I buy. If the market is telling me to sell, I sell. Okay, that's one. Now, two, I don't think gold is going to end the week bearish, simply because as of now we are seeing that there's there's a lot of indication that gold is possibly going to buy. We had a very strong push higher yesterday from the CPI data, and again, if the PPI comes in strong, rather weaker, then we should see gold possibly weakening and possibly moving to the downside towards 2,380, 2,370. But for now, gold is bullish. Don't fight the bullish momentum for it. That's what I can say. Okay. Thomas Machuma, you're saying the CPI came in less than the forecast, of which it was a sell, but we saw a buy. No, that's not true. That's not true. What was that? A buy on what exactly? Because everything that was supposed to sell sold. We're looking at sales for USD JPY. JPY sold. USD card sold. USD CHF sold. Then for the buys, we had a buy on gold. We had a buy on GBPUSD. We had a buy on EURUSD. We had a buy on NZUSD. So I think there was no manipulation at all. The sell that you're talking about, maybe on a Nasdaq, was simply because of the mega cap stocks on the Nasdaq. Most of them were bearish yesterday. That's why we saw a very sharp sell on them. Joshua Kimani, you're saying, what are your values for the Fib retracement? So when I'm using the Fib retracement, it's simple. I look for the swing low and the swing high, and then I add my retracements there. But the current for my Fib, on which I have on my M5, or rather on my MT5, I only use I'm unfortunate I won't be able to add the moving averages again. You might have to watch the snapshot on how to add them, because I've just concluded those. I don't know why you're taking me back, but they are going to be on a snapshot, so you'll watch them there. Now, for the question on the Fib retracement, this is how you add it. So let's say, for instance, I have my Russell 2000. Now I'm going to get my Fib here. I mark my swing high, which is here, and then my swing low, which is here. Okay. So I'm expecting I'm assuming this hasn't happened. All this price action hasn't yet occurred. Okay. So what I'm going to do there is I'm just going to simply bring my Fibonacci retracement and add it like this. Okay. So for me, my values, I have my 100%, my 61.8%, then my 50%. So I'm interested mostly on the 61 and the 50. So if the market gets to this level again, and again also fails, this would be a good sell point, where we have the market steadily slightly breaking above it but not breaking completely. So this would be a sell. Okay. But then if it fails to sell below the 50-day, for instance, or if you fail to see very strong sell momentum, then you should be now looking for a buy. Okay. So the moment we cross above our 100% retracement, then it simply means that now you have to look for buys, because the market has maintained price action above there, indicating that we're going to see potential moves to the upside. Okay. Awesome. I hope that helps. Okay. Okay, so let me just help you some quickly. So this is a plain chart, assuming this is a plain chart. Okay. I'm now adding my moving averages. Go to insert, go to indicators, go to trend, go to moving average, click there, then you have your 200-day moving average. So you can start with the 50-day, which is the first one. Make sure it is blue or green, depending on how you want your colors. Go back here, same thing here, trend, moving average, then you change it maybe to this color here. This is a 200-day. It can also be maybe red, for instance. There you go. Okay, so I hope that helps. Yeah, that's it from me, guys. I wish you all happy trading, and I hope you guys have been able to benefit from today's snapshot. Happy trading, guys. Cheers until we meet again next week. Cheers, guys.